What's up, everybody? Dave Bartosiak here, and I've got another chart of the day. Only this time, I'm not only talking about a stock, or at least not talking about one stock. Today, we're going to talk about something that glitters. It's gold, baby. And we're going to look at a couple of different things regarding gold. But for now, let's look at the spot price. So if you're on our interactive charts tab, you type in XAUUSD. This is spot gold, okay? So there's different golds. You can use the gold continuous futures contract, things like that. You use GLD also. And let me just show you GLD. See, GLD, you notice something? Right up there at the 50-day moving average, getting towards the top there. XAUUSD, same thing, right up there towards the moving average. A little toppy, although this one's going to trade 24/5. That's 24 hours a day, 5 days a week, as opposed to GLD that only trades when the U.S. market is open. But what are we looking at here? Obviously, a huge run. Unless you've been living under a rock, you know that gold has went on a heck of a run. But what I want to do is put a little bit of historical context in this, and I want to look at the last run in gold. So the last run, we bottom out here, August 2018. You're at 1160, basically, as the low. And it makes a run from that 1160 level all the way up to over 2000. And then it retraced a little bit. Now, this took a while. You're talking from August of 2018 to July of 2020. So basically a 2-year, I guess this is more. So let me pull this over so we have the exact. So August, it's 2 years, right? 2-year bull run in gold. Following the 2-year run, what happened? Well, you have gold prices approach that 50-day moving average. You have a failure there. The first test at the 23.6, tries to get up over the 50-day, fails again. Then you get a test to the 200-day, a little stop grabber. This is where the nasty stuff happens, right? When these algos go, take out a low beneath support, try to get to the swing high, fail again. This kind of choppy behavior, that's when it's harrowing. But ultimately, gold lets loose, gives some back, makes another attack at the highs before getting down to these other fib levels. Now, think about how astounding this is. It never ceases to amaze me. You draw this fib here, right? And then just extend these lines. So this fib is in place in August of 2020. And look at how those levels come into play in the future. This is 2022, 2 years later, and those fib levels end up coming into play. So pretty remarkable. And that's why we draw these things, folks, because they just work. And then you bounce around and do whatever. I'm not so concerned with the bouncing around and all this, right? And I'll show you why later. But this is what I want to focus on is the spike. And then you get this test of this 50-day that fails and then finds support. All right, so we're going to delete this. Then we're going to fast forward our track to what's happening now. Okay, so this run starts. I mean, you can argue this run really starts here. We're talking November of 2022, and then we've got the move until April of 25. So more than a 2-year bull run in this case. Now, you have several times now here, once, twice, 3 times a lady, where gold gets down to that 50-day moving average, and in this case, catches a bid. Now, what happens this time? And this time, got to keep an eye on this, okay? So this should be on your radar. 33.24, which is exactly where the stock is at right now. This is the 50-day moving average. We're sitting here on Wednesday, June 25th, and it is smack dab on that 50-day. Okay, now, but we have seen times when this 50-day just bounces. And you do see times where the 50-day messes around a little bit. You chop around it. Keep an eye on this. The moves that we've seen over the last few days, think about what's happened sort of globally, geopolitically. We're de-escalating the situation in the Middle East. Risk is starting to fall off the table a little bit. So maybe there's some gold speculation that was taking place there. Okay, so if we get some further downside action, which if you draw that parallel to what happened a few years ago, could be happening, you're going to see where your first sort of level of support might be. And that first level of support likely to come into play, I'm thinking, when that 200-day gets pretty close to that level. So that's just over 3,000 in this case. And again, we can get the real specific numbers if we want, but it's just over 3,000 is what you got to look for. In terms of RSI, we haven't really been overbought since this big spike here. Basically neutral, okay? Right around 50, just on the south side of 50, but it does that all the time throughout this rally. So looks to be at least pausing, if not stalling out. All right, so keep this in mind. Keep that in. Now, that is spot gold. So again, if you go to GLD, it's going to do something similar, right? It tracks along with it. So should come as no surprise that you had this gap down yesterday to the 50-day moving average. So bulls are going to say, okay, perfect. That's where I'm going to add more. That's fine. If you're a perma bull, great place to add, no question. But should this thing break down, I think you got to wait again for that 50-day, right? And if you're dollar cost averaging or something like this, you've got a different set of rules than people who are trading in it. Anyway, there's GLD. But people come to me and say, well, Dave, if I want to get a little bit more aggressive and actually get some equity exposure, here's a decent way. So EMG, so these are the gold miners and then the junior gold miners. The junior gold miners are going to be more volatile than the regular gold miners. Should come as no surprise that this has had a pretty good run as of late. You can draw your fibs there too. And you notice on this latest run, it's going to track with gold. It's not going to go 1-for-1 with gold, but there's a pretty decent correlation between the two. And you have another situation where this 50-day moving average, although that is sloped upwards, got a nice trend channel here. Everything's moving in the right direction. So keep an eye on this. If it breaks down below that support, below that 50-day, 200-day is going to come into play. And then you're going to be talking about fibs. So something to keep an eye on. Again, if you're just plugging your nose and buying the dip, it's always nice to buy that dip when you get close to that 50-day moving average. But just be wary because these trends don't last forever. And we have had some serious macro events take place, which could potentially shift that trend. Okay, the last one I'm going to talk about, GDXJ. So in this case, junior gold miners, higher volatility because it's like make or break for them, right? So they're going to do way better when gold prices are on the move higher, but they are going to do worse when gold prices roll over because they have that added element of volatility. Again, you still have that 50-day coming into play and the stock approaching. So, or the ETF, or ETN rather, in this case, ETF approaching. So there you have it. So that's my chart of the day here. I'm talking about gold, the gold miners, and the junior gold miners. If you're here on Zacks.com, be sure to follow the author. That way you're going to go ahead and get all of these chart of the day articles as they hit the wires. If you're on YouTube, be sure to subscribe to our YouTube channel so you can see me and everybody else here at Zacks and all our videos. So for everybody here, I'm Dave Bartosiak. I want to say thank you, and I will see you next week.